All right. Today was a very volatile day, and we finally did see some high volume selling, which was very evident with the price action gapping down, and we did lose this very critical support right around 548. And the best way to trade SPY, I told you, is very simple, is view this as a range between 548 and 556. And yesterday we hit the top of the range at 556, and we did get rejected, but it wasn't until after the bell that we had the earnings reports, which eventually led to this gap down. And as of the morning open, we opened right on top of this risk level. And from there, you knew there was a chance from the bottom of the range, we could have bounced up back towards this gap fill at 553. Or if we continued lower and we broke to the bottom of the range, we were looking to follow this arrow that brought us down towards 542. So we will need to draw new arrows today because, as you can tell, we broke down below the range and we did hit the price target. So now that we've hit this price target, we need new arrows and we need to watch new price action in new ranges. So the first thing I want to talk about is following price. You knew to get risk off, and yes, we did have the preferred scenario of the bull scenario that we would continue to push higher, but because it was such a low risk trade to be bullish, that still, in my opinion, was the right trade. It is completely fine if you disagree with me, and if you did make money shorting, congratulations, but because we're in such a strong bull market, those bull trades were still the highest probability. So as long as you manage risk and you took a very small loss when price action told us to, you still won today as a trader, because one of the parts of being a disciplined and profitable trader is being able to manage your risk. So on that breakdown of support was time to get risk off and even short the market if you wanted to, down from below 548 down to this support at 542. But now that we're at 542, we need to delete these old arrows and we need to talk about where we are going from here. So one of the things we've been talking about is the 100% guarantee gap fills, and one of those 100% guarantee gap fills is still open, which is this gap down here at SPY 537. Now tomorrow we will have GDP data, and then on Friday we will have PCE data, and those data reports will drop before the bell, meaning the market opens at 9:30 a.m. Eastern and those data reports drop at 8:30 a.m. Eastern, which will lead to very large gap ups or gap downs. So when we look at price action from here, if you did not have an overnight swing trade, then you are just simply reacting to the price action, whether we gap up or down. And below 542, there is a very good chance we are going to fill that gap at 537. And then if we gap up above 542, there is a very good chance we push back to the top of this range, which is going to be back at the breakdown at 548. So above 542, we're looking for 548, and below 542, we're looking for 537. Another development today is that we now officially have the rejection from the all-time high and a lower high into a new lower low. So this is officially a daily downtrend while we are trading down below 556. So below 556 and definitely below 548 are risk off looks, which doesn't mean we can't bounce. It simply means you are looking for lower highs and lower lows until the trend tells us otherwise. Now, if we break out of the range of the arrows I've drawn above 548, we will fill a gap at 553. And if we break down below 537, we are looking for a push down towards 531. So you have a very clear range. It is all dependent on whether we are above or below 542. Above 542, you can be bullish, but below 542, you are looking for a gap fill at 537. So from there, now you just need to let the price action do all the talking and have a trade plan prepared to act accordingly. On the NASDAQ 100 triple Qs, we were down 3.59% today, and the triple Qs got that 100% guarantee gap fill, which was that gap fill at 468. And to be very clear, I am not saying that all gap fills are a 100% guarantee. I am simply saying that the gap fill at 468 was a 100% guarantee, and as of today, we can cross that off the list because we have now hit that price target. And just like SPY, we will need to delete these old arrows because now we've hit the price targets. We need to update where we're going from here. But before we delete the arrow, let's look at how the price action told us what to expect today. And today we gapped down right on top of this risk level, which is just above 473. And right on top of that risk level, there were two options from the open. We either bounced from that risk level and went up to 480, or we were going to get rejected from it and come down here towards 468. Obviously, you can tell the rejection was the price action we got. That was your indication to get risk off or short down towards the gap for that 468. And then once we hit the gap fill, we continued lower towards this support zone right around 463. So from here, let's go ahead and delete these old arrows and let's draw new ones because the risk level is no longer 473 since we broke down below it. We now need to watch this level at 463. So at 463, if we break down below that, we have another gap fill down here at 455. And if we can hold above 463, there is a chance we push all the way back down to the breakdown above 473. So above 463, we can go to 473, and below 463, we're looking for another gap fill just above 455. Now, another thing I want to point your attention to is that we now have two lower highs. We have the all-time high, we have the lower high rejection from the 490s, and now we have another lower high rejection from the 480s. And every single one of these lower highs went on to make a lower low, which meant we broke down below the previous low. And that is what is defining a bear trend of lower highs and lower lows. So even if we bounce in, even if you take long trades, you need to be very open to the idea that this market does want to go lower and that we do have lots of gaps to the downside, but you also have to respect the fact that we have gaps to the upside. So if we can break through the top of this range at 473, we do have a gap fill at 480. And then, of course, the previous range high of resistance right around 482. So once more, let the price action do all the talking. You have very clear risk levels. And because we are now starting to see some lower highs and lower lows, do not expect a very strong trending market. I think this is increasing the probability we just enter a trading range, which is going to be very frustrating if you're one of those traders that is only used to trading short dated options, because a range bound market could get very choppy and very volatile and be full of whipsaws. So make sure you know these risk levels and you know exactly what price action you're looking for. And then when you see that price action, how you are going to react to it and trade it. Now, because we did close this gap at 468, I want to go ahead and delete that off the chart to clean things up a bit. And I will remind you one more time, the risk level for the triple Qs is right here at 463. On the Dow Jones, we were down 1.19% today, and the Dow Jones is getting that pullback we were looking for between 398 and 400. And I do believe from here, we will see the bull stepping in, and I am looking for a very powerful bull rally towards 415 and then 420. Now, if we cannot hold above 398, it is completely fine to get risk off, because that is the risk level we want to be paying attention to. And more specifically, that is the bottom of the range of the risk level, because I'm saying the risk zone is between 398 and 400. If we can't hold 398, then we come back down towards 394. But overall, I still think this is a buy the dip opportunity in the Dow Jones before we continue higher in a very powerful bull trend. On the Russell 2000 IWM ETF, we were down 2.15% today with a very clear rejection from that resistance at 223. So we'll draw one more arrow and possibility here that if we continue lower and we cannot hold this support at 216, there is a very good chance we do go down and fill a gap at 211. Now, if we hold above 216, and we can bounce and break this range high at 223, then we are looking for the price target at 228. So above or below 216 will tell us everything we need to know. And there is one more possibility that we just build out some kind of bull flag and we continue to ping pong around within this range before we get a breakout. And then that breakout of the wedge will either be to the upside towards 228 or the downside at 211. And the only difference with this bull flag look or this wedge look is that we would eat some more time off the clock before we get a breakout of this range. So 216 we'll call the range bottom, and then the top of the range we'll call 223. Trade the range and then trade the breakout. On the ARKK ETF, we were down 6.39% today, so a very, very aggressive sell-off here, and this is now starting to look like a lower high rejection because we did break this low at 46.5, and we did slice through that risk zone that I gave you at 45.7, which could completely invalidate this arrow to the upside. So while we're below 45.7, you do want to be open to the possibility that we're going to push down towards this support right around 44. Once more, I'll remind you, I do not trade this or suggest trading this. This is simply a good indication of risk on or risk off sentiment. On the VIX, we were up 22.57% today, and as we broke through that critical support in the indices, I told you there was a chance we saw a spike in fear in the VIX going up towards 18 and 20, and because we lost that support, we did see that spike in fear. Now from here, it is very important to pay attention to whether or not we continue lower and continue to break through support, and if we do, continue to expect the VIX to spike as we see more and more fear in this market. Even though we went lower today, especially on SPY, it was not on extremely high volume. So if we continue to see more panic and more high volume selling, we can continue to go lower. On Bitcoin, we're currently trading right around 66,000, and we are still above this breakout and risk level at 65,000, which I told you could stay bullish above. and we've already hit the old price target. So let's draw some new arrows, and above 65,000, it is possible to go back to the top of the range right around 71,000. But if we do break down below 65,000, it's very likely we will come back down towards 62,000. So you can stay bull above 65,000, and if we break below it, it may be time to start looking to get risk off. On Nvidia stock, we were down 6.8% today, and the Nvidia arrows told us we were looking for a very critical rejection or possible bull breakout right between 125 and 127. And you can tell from the gap down and the price action that we are getting the bearish scenario of the lower high rejection, and we are now sitting at a very critical support zone just below 115. If we cannot hold 115, we're looking for 109 and then a gap fill just above 106. And if we do start to bounce from 115, it is possible we fill a gap right around 122. So above 115, you can try to stay bullish, but if we're down below it, you are looking for lower prices between 106 and 109. On Tesla stock, we were down 12.33% today, and this was the stock that had earnings after the bell yesterday. And as you can see, we did break down below this wedge. We gapped down below the support at 230, and below 230, there's a good chance we are filling a gap at 213. So let's clean up this chart a bit because we now have updated price action. And while we are down below this breakdown right here at 244, we were looking for 230, but we gapped down below it. So below 230, we're looking for 213. So I know this was a very large gap and it's very difficult to react to that, but this is the price action to the downside at 213. And if we break that, we're likely going towards 197. And if we can hold above this gap fill and find it as support, we're looking for a pushback higher to the breakdown at 230. And then above 230, we could continue higher towards 244 to 245. So 230 is still the risk level. You can stay short below it, but do keep in mind there's a very large gap to the upside and we have nearly filled the gap to the downside. On Apple stock, we were down 2.88% today, and this idea is playing out very well that we would likely get a pullback towards 218. And as long as we can hold above 218 at this previous breakout and the support trend line, I do think this is a trade idea you could take from 218 up to about 232. This could happen before earnings, but more than likely it'll happen after earnings. And then if we break through the highs here at the top of the range above 234, there is a brand new all-time high price target in the 240s. So if we can't hold 218, then we will be looking for a push lower down towards 212, and then below 212 we go to 207. So jumping back over to the S&P 500, the bears are starting to show up in force here, and we are getting price action that allows for a bear trend and lower prices. And you have very clear risk levels. You know exactly when you were supposed to get risk off and what targets we're looking for. And do keep in mind, on SPY, it is still very possible we go a bit lower to fill that gap at 537, but we never know exactly when these gaps will fill, and we now have gaps to the downside and the upside. So you need to be very disciplined and not focus so much on the gaps here, focus on the risk levels and whether or not we are above or below them with the price action. This is likely going to remain a very volatile market through the summer. And a volatile market is a very great time to be a trader as long as you are using discipline and risk management, because a volatile market will chew you up and spit you out if you do not have a plan and you are simply reacting by emotion. In a volatile market, you can go up and down just as fast. It is not clear which direction you are going to move during volatile times, especially if we get stuck in a volatile trading range and we ping pong between lows and highs and we don't have a true trend in this market. So make sure you are laser focused, make sure you have trade plans ready and be prepared for the bear scenario and the bull scenario, and then follow the price on the chart and react accordingly. We are absolutely crushing this market in the Stock Channel Discord server, and we are going to continue to crush this market. And this volatility is a great time to be a trader, so now is a great time to get plugged into the Discord community. If you want access to all of my trade ideas, my technical analysis, and my intraday updates, that's in my Discord server. And you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.